Hi, I'm John, and welcome back to Financial Level, the channel dedicated to taking the mystery out of personal finance. If you're tired of feeling stuck and want to finally take charge of your money, you're in the right place. Don't forget to hit the subscribe button and turn on notifications. Now, let's dive into today's video. Have you ever struggled to figure out how to manage your finances when your income is irregular? Maybe you're a freelancer, a creative professional, or a business owner whose earnings depend on gigs, clients, or seasons. If so, this video is for you. Today, I'll show you how to create a budget that works even when your income fluctuates. We'll cover 5 simple steps to help you take control of your finances, no matter how unpredictable they may be. Plus, I'll share my personal tips and tools for tracking your budget. So, stay tuned. It's going to be insightful. And at the end of this video, I'll reveal the one key principle that helped me avoid debt during my most financially unstable times. Don't miss it. Irregular income can be a real challenge. Many people deal with this, from freelancers and artists to entrepreneurs and seasonal workers. The main problem is the lack of predictability. You might earn a lot one month and then almost nothing the next. This creates chaos, debt, and stress. But here's the good news. You can take control if you have the right strategy. 5 steps to budgeting with irregular income. Step 1. Identify your essential expenses. The first thing you need to do is figure out how much you need to cover your essential expenses. This is what I call your baseline budget. It includes rent, food, utilities, transportation, and other necessities. For example, if your baseline budget is $1,000 a month, you now know the minimum amount you need to earn to survive. This becomes your financial anchor. Step 2. Calculate your average income. Next, calculate your average income. Look at your earnings over the past 6 to 12 months and divide by the number of months. For example, if you earned $12,000 over 6 months, your average income is $2,000 per month. This gives you a realistic idea of what to expect moving forward. Step 3. Build an emergency fund. An emergency fund is your best friend when your income is unpredictable. Aim to set aside at least 10 to 20% of every payment you receive. Your goal should be to save 3 to 6 months' worth of baseline expenses. If your baseline budget is $1,000, you'll need $3,000 to $6,000 in your emergency fund. This safety net will protect you during slow months. Step 4. Prioritize your spending. Now, prioritize your spending. First, cover your essential needs. Then, focus on long-term goals like paying off debt or investing. For example, if you receive $2,000, 50% goes to essentials, 20% to your emergency fund, 20% to long-term goals, 10% for fun or personal spending. Step 5. Practice budgeting ahead. Finally, work with the money you already have, not the money you expect to receive. This is called budgeting ahead. Only allocate funds that are already in your account. This prevents overspending and keeps you grounded in reality. Let's quickly go over some common mistakes. Overestimating your income. Be conservative with your expectations. Skipping the emergency fund. Without it, you're one slow month away from financial trouble. Impulse spending. Always stick to your plan. And that's it, friends. Now you know how to create a budget, even with irregular income. Remember, the key to success is discipline and planning. If you found this video helpful, give it a thumbs up and subscribe to the channel for more financial tips. And let me know in the comments, which step will you implement today? See you in the next video.